This is Nightly Business Report with Sue Herrera and Bill Griffin.
What a week. Up, down, up, down. Stocks take investors on a wild ride, and after all of that, things were barely changed. So where do we go from here? Finding growth at a time when the economy may be slowing and stocks are looking for direction, this week's Market Monitor says you might want to consider what he calls high-quality companies. And political soapbox, Democrats descend on the Iowa State Fair with one goal in mind: bring their trade message directly to one audience, farmers. All of that and much more tonight on Nightly Business Report for this Friday, August 9th. Good evening, everyone, and welcome. Bill has the evening off. Well, we made it. We made it through a week that was dominated by trade, and stocks were pretty much all over the place with steep sell-offs and strong rallies. And today wasn't any different. Stocks started lower after President Trump said the U.S. was not ready to strike a trade deal with China, and then added to the tension by talking about Chinese tech firm Huawei.
We're not going to do business with Huawei. We're not doing business with them. And I really made the decision. It's much simpler not to do any business with Huawei. So we're not doing business with Huawei. That doesn't mean we won't agree to something if and when we make a trade deal. But we're not going to be doing business with Huawei.
And stocks headed lower. The White House later clarified, saying it was only the government not buying from Huawei. And with that, stocks recovered a bit. The Dow had been down about 280 points and then briefly went positive, but ended down 90 to 26,287. The Nasdaq dropped 80 and the S&P 500 was off 19. And today's action seemed only fitting on this wild week.
We're going to have a lot of red on that board.
The Dow Jones Industrial Average that right now is down 926 points. Investors worrying about the U.S.-China trade war escalating.
The Dow Jones Industrial Average closes the day down 763 points.
Worst day of the year for stocks.
A healthy little bounce back today, up about 1% on the S&P.
There was buying today. Back over the 26,000 level in the Dow, ended up 313 points right near session highs.
We have regained about a little less than half the losses of yesterday.
Another big sell-off here on Wall Street.
Why have things gotten so weird in August? Well, two things have happened. Number one, the Federal Reserve happened, and number two, more tariffs.
The market pain is a lot less than what it was in the first hour or so of trading. Right now, we're only down 212.
Dow Jones Industrial Average closing just fractionally negative. And this is the biggest comeback.
Stocks are staging a recovery today.
It's a pretty big move higher, 1.5% almost to the upside.
With today's gains, even with Monday's massive drop, we are now positive for the week.
The market half an hour into trading, we pulled back.
Dow down triple digits again, down right now about 165 points.
We are sitting at session lows right now. S&P 500, 2902 is a level.
We've had a nice little rally just as I've been standing here in the past few minutes. There's the close for a wild week, grouping a little bit going into the close. The Dow ending the day down 82, S&P 500 down 19 points.
For the week, despite all of that volatility, all three indexes were off just a fraction. So let's turn now to Sandy Villery to talk more about the market and why it's so confused. He is a partner and portfolio manager at Villery & Company. Sandy, welcome. Nice to have you here.
Thank you, Sue. Appreciate it.
I think that Bob Pisani really said it the best. Why have things gotten so, quote unquote, weird in August, or perhaps better said, so confusing?
Yeah, and August is a tough month for the market. I think it's the second worst for the month for the market in throughout the year. So it just seems like volatility's a little bit escalated. But yeah, you've got a lot of things going on, from earnings to the trade war and certainly the Fed. So a lot of things that we're trying to keep our eye on that are creating a lot of volatility, especially trade war related.
I was going to ask you, which is the most important to you of those factors that you just mentioned? Which are you watching most closely, or which is the greatest variable for you?
Yeah, so I'm a very bottoms-up oriented stock picker, so I'm looking at earnings very importantly. But earnings have now passed us. We've had about 90% of the S&P 500 report earnings. So looking forward, I'm focused on the trade war. And what's ironic is that the trade war and the Fed really go kind of hand in hand. The kind of the uglier the trade war gets, or the more it escalates, the higher the likelihood that the Fed could potentially cut rates in September and maybe October.
You know, there's two ways to think about that from the analysts that I've been talking to. One, the trade war, if it continues and stretches out or becomes even more acrimonious, would force the Fed's hand to cut interest rates. I talked to another analyst who said that would really bother the market because it means that the Fed is indicating that things are worse than we think. What do you think of that argument?
Yeah, and they're supposed to be totally independent, and I believe the Fed completely is. But as the trade war escalates, then you're seeing already, we've got 3-year lows in manufacturing, you've got inflation that's extremely low, and you're seeing growth slow down. Just looking at earnings, year over year, are going to be negative when you look year over year, just at the second quarter reporting. So if the Fed is truly data dependent, and they're looking at some of those outcomes from the trade war slowing on all sorts of fronts, then they're going to have to act.
And then the bond market seems to be telling a different story, pointing perhaps to a recession. How are you interpreting the bond market and interest rate action this week?
Yeah, and the bond market always seems to be a little bit smarter than the stock market. And so you're seeing the 10-year down at a 174, and then the 3-month is up at 2%. So that is an inverted yield curve, and oftentimes an inverted yield curve can predict a recession. So it makes me a little bit nervous. But for investors in general, when they're looking at where to place their money, you look at the 10-year Treasury at a 174. The S&P 500 yields about 2% on the index. So kind of makes stocks look attractive.
Indeed. Thanks so much, Sandy. Great to have
Thank
you
for
with
having
us.
me, Sue.
Sandy Villery with Villery and Company. And as we have been discussing, overall, bond yields have been falling, and so have mortgage rates. The latest drop in rates has mortgage lenders scrambling to keep up with demand. Diana Olick has more.
Quicken Loans, the nation's largest lender, just had its best quarter in the company's 34-year history, originating $34 billion in mortgages and setting a monthly record in June. Quicken said it was looking to hire about 1,300 employees to handle the new volume. It's all thanks to a sharp drop in mortgage rates that started in April and accelerated this month. That caused a sudden refinance boom that most lenders hadn't expected.
If you think back even to the fourth quarter, we were all talking about anticipating, rate hikes going into 2019.
At SunTrust Bank, phones have been ringing off the hook, stretching capacity.
We are really looking at ways to preserve our client experience, which may mean also just for consumers to be aware that it might take you a little bit longer to get through the process. And that might mean also taking a little bit longer to get a hold of a mortgage professional to assist you.
Borrowers aren't just looking to lower their monthly payments. Some want different loan products with different terms, while others may want to consolidate debt like student loans and credit card debt. Whatever the reason, refis are rising.
Refinancing is a no-brainer because you can save thousands of dollars and every month you have more money in your pocket.
Rates have been pretty volatile, though, so borrowers shouldn't try to wait and time the market. Instead, get a lender ready now and make sure that lender is ready to jump. For Nightly Business Report, I'm Diana Olick in Washington.
And with those lower bond yields in the spotlight these days, investors are on the hunt for return. And one place they're looking is Muni bonds. Seema Modi has more.
The search for yield is driving investors into different parts of the bond market, specifically debt issued by states and municipalities to finance civic projects like airports and schools. Muni bonds have already seen record inflows this year of $52 billion, on pace to surpass the $70 billion of inflows seen in 2009. And if the Fed continues to cut interest rates, Wall Street strategists expect demand to stay strong. In addition to low rates, changes to the tax code, which limited the SALT deductions claimed by households in high-tax states like New York, has pushed investors to look for tax-free income. The SALT cap was a key component of the tax reform bill. Experts point out that most municipal bonds are exempt from federal income tax, and depending on the bond, in many cases, also exempt from taxation by the issuer's home state. Now, the surge in investor demand also comes as bond issuances have come down. Total bond issuance has fallen from $448 billion in 2017 to $338 billion in 2018. That, according to Muni Market Analytics. Still, 4 high-profile projects coming to market in August: the San Francisco Transit System, Pennsylvania Turnpike, Common Spirit, and the Dallas-Fort Worth Airport. So far this year, Goldman Sachs' dynamic Muni Income Fund has returned 5% to investors. And while Muni bonds can often be seen as a riskier part of the bond market to invest in, the number of defaults at the city and state level have declined. In fact, only 41 defaults in 2018. That's the lowest on record, according to Trip Kaiser at Muni Market Analytics. And so far in 2019, there have been 33 defaults. Still, financial advisors caution to not only focus on the tax-free income, but review the quality and the investment grade of each bond. Plus, if interest rates turn around and move higher, that could make Muni debt a less attractive place to park your money. For Nightly Business Report, Seema Modi.
To the economy, where the wholesale cost of goods rose moderately last month thanks to a rebound in energy, but inflation on the wholesale level was flat year over year. So while inflation here is not a problem for now, deflation is a growing concern in China. July inflation data showed producer prices in China contracting for the first time in 3 years, while consumer prices there were pushed higher by surging prices of vegetables and pork. And investors have been keeping a watchful eye on another potential risk to China's economy, the tense situation going on in Hong Kong between the government and protesters. Eunice Yoon has more from Beijing.
Hundreds of protesters have gathered at the Hong Kong airport handing out anti-government leaflets to raise awareness about their concerns to the city's visitors. The sit-in, which is expected to last through Sunday, is just the latest of a series of protests that started as a march against an extradition bill, but have moved on to protest Beijing's encroachment in the city. Today, Hong Kong's leader, Carrie Lam, called for calm, but showed no willingness to make concessions to the protesters. Lam warned that the downward economic pressure was like a tsunami. Her financial secretary said the chances of a further slowdown there is high. The problems in Hong Kong are filtering into the already tense U.S.-China relationship. Beijing has been characterizing the protests as organized by foreign powers, in particular an American diplomat in Hong Kong. Chinese state TV has described the political officer as a black hand creating chaos in Hong Kong after she met with one of the protest leaders. A pro-Beijing Hong Kong newspaper called her a low-profile expert on subversion and published photos and personal details of her and her family. A State Department spokesperson called China a thuggish regime for releasing that information, and today the Foreign Ministry's Hong Kong office responded, saying the blatant slander against China exposed the U.S.'s gangster logic and hegemonic thinking. So on top of the trade conflict and Huawei, the Hong Kong situation is another risk factor for U.S.-China ties. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Up next, filling the gap.
These airplanes are part of the airline industry handling the 737 MAX crisis. What are they doing? I'm Phil LeBeau outside of Montreal, Canada. That story coming up on Nightly Business Report.
Nearly 5 months after the FAA grounded the Boeing 737 MAX, airlines around the world are scrambling to find replacement planes. Those planes are often leased from other airlines or charter aviation companies who find themselves sitting in an enviable position with extra planes and high demand. Especially in Canada, Phil LeBeau has more from Maribel, Quebec.
This is one of the hottest planes in the commercial jet market. A 737-200. With more than 500 Boeing 737 MAX planes parked, airlines that plan to fly them have been scrambling to find replacement jets. Great news for Noliner Aviation, just outside Montreal. It's leasing 737s like this to an airline in Toronto needing replacement planes.
We have a lot of requests from many airlines that don't have enough capacity to do their charter flight on the weekends or their regular schedule, so we're providing charter flights for these airlines.
Airlines looking to cover their schedules are pushing up short-term leasing rates, in particular for older Boeing 737s. Often, airlines will lease the plane and a crew to fly it, or they'll even pay another airline to fly their routes. Take Air Canada. It's hired Qatar Air to fly some of its routes. Industry veterans say passengers probably won't notice the change.
They're getting onto a fuselage, they don't even see the colour scheme, they're walking down a jetway. It may be once they get into the seat and they think, oh, you know, last time I flew I was in this kind of seat, now I'm in a different seat. But really, you know, I suppose they're just happy to go from A to B.
For Nolan or Aviation, the 737 MAX crisis has lifted demand for its fleet of planes to a new level. And executives believe that demand is expected to continue at least through the holidays.
I think it was after a few weeks after the issue with the 737 MAX started to get very publicized. We started having requests about our availability for the summer. And then it changed to will you still be available during the falls? And now we're talking about Christmas times.
An airplane leasing market lifting off as airlines adjust to life without the MAX. Phil LeBeau, Nightly Business Report, Mirabel, Quebec.
An anonymous letter by a whistleblower tanks Mattel. That's where we begin tonight's market focus. The toy maker will be pulling a bond sale after receiving a letter and will now be canceling the sale of senior notes due in 2027. The company plans to investigate the matters in the letter but did not disclose what they were. The stock plunged nearly 16% to $11.31. Nektar Therapeutics said that there were manufacturing issues in 2 batches of experimental cancer drugs given to patients in a trial. Separately, the biotech company reported a narrower than expected loss, but missed revenue estimates. Nektar plummeted more than 29% to $20.92. JCPenney received a notice from the New York Stock Exchange that the company has 6 months to get its stock price above $1 or get shareholder approval of a reverse stock split to avoid being delisted. The struggling retailer has seen its shares drop more than 70% in the past year. Today, JCPenney fell more than 13% to 60 cents. PG&E posted mixed results, beating earnings estimates but coming in shy on revenue. The company says the losses were due to costs associated with California wildfire-related lawsuits, bankruptcy, and also other expenses. The stock fell more than 2% to $18.12. Dropbox beat Wall Street's forecast for both earnings and revenue, but the cloud storage company saw a drop in its average revenue per user, which is a key factor to the company's growth. That sent shares down nearly 13% to $18.71. And Uber's shares had one of their worst days since the company went public after the company reported a massive loss in its latest earnings after the bell yesterday. Yet the CEO is still positive about the rest of this year.
The back half of the year, you're going to see, if trends stay the same, revenue growth in excess of 30%. And when you look at profitability, we beat our own internal targets. We beat street targets as well. We came in at a loss of $656 million. It's still a big loss, but the losses are improving. The take rates are improving.
Shares dropped almost 7% to $40.05. On that note, it's time for our weekly market monitor, who has names of high-quality stocks he says are reasonably cheap and could grow double digits over the long term. Joining us is David Yepes. He is the Senior Investment Analyst at Essential Wealth Advisors. Welcome back, David. Nice to see you again.
Good to see you again. Thank you.
You say you try and identify companies that have kind of open-ended growth opportunities, which is a challenge in this market environment, but you like Delta Airlines. Why?
Yeah, so Delta Airlines is the best run airline in the world. They're transforming the traveling experience by investing the most in technology. So now in the future, when you travel, you're not going to need passports or tickets. It's just every airport is going to have biometrics. So you just show your face to the camera and that's it. And Delta is also improving pre-ordering for meals before you board on your airport, on your airplane and things like that. So it's the best run company in the airline industry. We think that the amount of travelers is going to grow over 50% in the next decade. And so we like it right here.
All right. Teradyne is next on the list. Why do you like that?
Yeah, Teradyne is the #1 player in collaborative robots. These are robots that work right next to humans for industrial applications. So think about, light duty, things like welding or, transporting goods from one area to another. And so we think we're at the beginning stages of this industrial revolution, and Teradyne is leading the way on that.
And finally, Gartner, which is basically a tech play, an IT play.
Yeah. So if you look at the stock for the past 5 years, it had a big run, but in the past few weeks, it dropped over 20%. We think this is a good entry point because they help CEOs around the world in technology. They provide research consulting to make better decisions in technology decisions, and so they're helping all these companies, retailers, banks for growth in the future.
How do you feel about the economy and the market overall, David, especially given the volatility that we saw this week?
Yeah, we think all the volatility is related to the trade talks and how, the slowdown of the global GDP. But we think eventually there's going to be a trade agreement. It's going to work itself out in probably next year, sometime before the election time. But yeah, that's our base case scenario. We think eventually, if you're a long-term investor, that will help. That's the view we have.
Has it influenced the way you're allocating capital?
Yeah, so for those portfolios that we think they're overweighted in equities, we try to maybe sell a little bit of equity and try to keep a little bit more cash on the sidelines. But we are long-term investors. We're looking 5 years, 3 to 5 years ahead, and we think the market will be higher from now.
David, thank you so much. David Yepes with Essential Wealth Advisors. And coming up, focusing on the farmers.
More than 1 million people come to the Iowa State Fair every year. Now, many of them are farmers seeking relief from the trade war. Democratic contenders are here to try to win their vote. We'll tell you how coming up on Nightly Business Report.
The Iowa State Fair will become a focal point for trade policy over the next few days as all of the 2020 Democratic presidential hopefuls take their policy messages directly to farmers impacted by the U.S. trade agenda. Kayla Tausche is at the Des Moines Fairgrounds in Iowa for us this evening.
Amid the corn dogs, cotton candy, and carnival rides,
we are the most unique idea.
You'll find more than 20 Democrats running for president, testing their stump speeches at the Iowa State Fair.
Dean Steve.
Connecting on the ground with swing voters, many of whom are farmers caught in the crosshairs of the trade war. Matt Paul is one of the state's leading Democratic strategists. He says the trade tensions mean the independent vote is up for grabs.
The stakes are about as high as they can get.
Politicians and farm reps here say it's now a matter of survival.
It caused them a lot more than a little financial pain. I think it's going to cause a lot of them to go bankrupt.
Soon our bankers are going to say you need to liquidate some of your assets in order to keep and continue.
When a sixth-generation farmer says, I hope my son doesn't become the seventh, we have an issue.
Brad Meckley's family has grown soybeans, corn, and hogs in nearby Elkhart since the 1960s. He voted for President Trump in 2016, but wants certainty by next year.
We're in the point here where we're starting to suck air. We need financial assistance to maintain our productivity in what we're doing.
Many Iowans, including Republican Senator Chuck Grassley, have received federal aid to help them stay afloat. Grassley says his voters are sticking by Trump.
I have not seen any departure from the attitude that farmers know that this president is the first one to tackle China cheating the Americans out of a lot of things.
President Trump says he's in no rush to make a deal with China and that the U.S. holds all the cards. But Democrats are hoping to turn the tide of the Hawkeye state before the caucus 6 months away. For Nightly Business Report, I'm Kayla Tausche in Des Moines, Iowa.
Billionaire Stephen Ross threw a fundraiser today for President Trump. Ross is the founder and the chairman of the parent company of the gyms Equinox and SoulCycle. And word of the event has led to calls for boycotts and membership cancellations. And as Robert Frank tells us these days, everything political comes with a business risk.
Billionaire real estate and sports tycoon Stephen Ross defending his decision to hold a fundraiser for the president after customers threatened to boycott his companies. Now, Ross is the chairman of the related companies, which owns Equinox Fitness and SoulCycle, and he is the part owner of the Miami Dolphins. Now, news that Ross would be hosting a fundraising lunch for President Trump Friday with tickets as much as $250,000 touched off a social media firestorm. Celebrities like Billy Eichner, Kenny Stills, and Chrissy Teigen called on customers of Equinox and SoulCycle to pull their business in protest. Equinox and SoulCycle tried to distance themselves from their chairman and owner, saying, quote, they have nothing to do with the event and do not support it. And they added they believe in tolerance and equality and will always stay true to those values. Now, Ross issued his own statement saying, quote, I've always been an active participant in the democratic process. I have known Donald Trump for 40 years, and while we agree on some issues, we strongly disagree on many others, and I have never been bashful about expressing my opinions. Now, brand experts say that in today's politically charged world, donating to the upcoming presidential campaign carries extra risks for donors and companies, especially when the candidates have differing views or politics from their customer base.
The issue here is if you hold yourself out as a business to have certain values and you have a certain culture, then you need to always act in alignment.
Now, Equinox and SoulCycle declined comment on how many members have canceled. For Nightly Business Report, I'm Robert Frank.
And before we go, here's another look at the final day's numbers on Wall Street. The Dow had been down about 280 points, then briefly went positive, but ended down 90 to 26,287. The Nasdaq dropped 80, and the S&P 500 was off 19. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend. We'll see you here Monday.